AI bookkeeping is not a magic wand. It's a tool. And like a tool, if you use it wrong, it creates bigger problems than it solves. But if you use it the right way, it'll save you hours every month and give you cleaner books, way cleaner than you've ever had. Today we're getting into a topic that every small business owner needs to understand because it's exploding right now. AI bookkeeping. And I don't mean the fantasy marketing version you see in ads. I'm talking about what actually works and what doesn't, and what will straight up burn your business down if you trust it blindly. Because here's what's happening. A lot of small business owners are tired and drowning in receipts and month-end chaos. They're tired of spending money on bookkeeping, and it still feels like they're confused. So when you see tools promising automated bookkeeping in minutes, they get it very excited. But when they try it and suddenly numbers don't match, their categories are wrong, their bank feeds break, and they don't know if they should trust the software or trust their gut. So today, I'm going to give you the truth. AI bookkeeping is not a magic wand. It's a tool. And like a tool, if you use it wrong, it creates bigger problems than it solves. But if you use it the right way, it'll save you hours every month and give you cleaner books, way cleaner than you've ever had. Let's break it down into 3 parts. What AI does well, what AI does terribly, and how to build a hybrid system that gives you the best of both worlds without putting your business at risk. Let's start with the good stuff. AI actually is powerful when it's doing the job it's designed for. The first big win is categorizing simple transactions. If you buy gas for your company truck every week, AI learns that's fuel. If you pay your phone bill every month, AI knows where that goes. It handles repetitive stuff fast, and that alone saves you time. The second big win is predictable patterns. AI is strong when your business has consistency. If you run a small shop or a service company, and most of your transactions are the same every month, AI gets pretty damn accurate over time. Third, AI is really good at flagging weird behavior. If you suddenly have a charge in your credit card that doesn't match a historical pattern, AI will often catch it before you do. Maybe a double charge, maybe fraud, maybe your vendor charged something. That detection alone is worth using AI. Another thing that works well is bank feed reconciliation. AI can match transactions with invoices and bills much faster than a human. If done right, the month-end cleanup takes minutes, not hours. And one more positive, AI bookkeeping tools are cheap. Cheaper than a full-time bookkeeping staff. Cheaper than somebody dumping everything in to your accountant at tax time and charging you for a whole year of mess. So yes, this is a really powerful tool here. And now let's talk about where everything falls apart with AI. AI is good with rules. It's not good at judgment. And bookkeeping is judgment. Here's the first big problem. AI has no idea what your intentions are. It doesn't know that Home Depot run on Tuesday was materials for a job, but the Home Depot on Friday was office supplies. It guesses, and sometimes it gets it wrong. Second, AI is terrible at job costing and project costing. If your business needs to track the profit on a job the way most trades do or service companies do, AI is not smart enough to link costs to the correct projects unless you manually train it. And even then, it will make mistakes. Third, AI does not understand tax implications. You might buy equipment. AI may categorize it as an expense, but in reality, it's a capital asset. And the second that you let AI misclassify that stuff, you've created a tax mess. Fourth, AI is awful at nuance. It doesn't know that one invoice from a vendor needs to be split across 3 accounts. It doesn't know that the loan payment has both interest and principal. It doesn't know the contractor payment needs a 1099. That is simply categorizing the whole thing in one spot and calling a day. And here's the one big one. AI does not think in terms of healthy business decisions. It cannot tell you if you're profitable. It cannot tell you if your margins dropped. It cannot connect the dots between your numbers and your behavior. AI bookkeeping is like hiring somebody who's great at data entry but terrible at judgment, which brings us to the real solution. The hybrid system, AI plus human. The best bookkeeping system in 2026 is not AI alone. And it's not humans alone. It's a hybrid. AI does the repetitive work. The human does the critical thinking. Let me explain how it works. Step 1, automate your bank feeds. Your accounting system should automatically import transactions every day. AI will categorize 70 to 90% of your routine activity. That's good. Let it do the heavy lifting. Step 2, add human review weekly. Once a week, someone looks through the AI work and corrects whatever's off. That takes minutes, not hours, because AI already handled the grunt work, but the human validation makes the books more trustworthy. Step 3, monthly cleanup by a professional. This is where strategy comes in. Every month, someone with real financial knowledge cleans up the books. They fix misclassifications. They do bank reconciliations. They check loan balances. They adjust the depreciation. They look for leaks. AI can't do that. Humans can. And the combination of those two keeps the books that you've got very clean. Step 4, use AI for reporting and dashboards. AI is great at taking numbers and organizing them. It's great at generating visual KPIs. It's great at showing trends. Use it. Just don't let it make decisions for you. Step 5, human interpretation. This is the most important part. A human must decide what the numbers actually mean. A human must analyze margins, cash flow, pricing, labor efficiency, inventory turnover, receivable timing, and all the things that actually matter. AI bookkeeping gives you the information. Humans tell you what to do with the information. Here's what you should automate. Reoccurring monthly bills, subscription charges, fuels, phones, utilities, simple vendor relationships, reoccurring client invoices, bank feed matching, receipt uploads, basic categorization patterns, alerts for any unusual transaction, and here's what you never automate. Payroll accounting, capital assets, loan amortization, multi-line invoices, job costing, project costing, owner compensation, sales tax, payables and receivables timing, anything requiring judgment. When owners try to automate the wrong things, their books become useless. When they automate the right things, their books become cleaner than they've ever been. The point of bookkeeping isn't taxes. That's the bare minimum. The point of bookkeeping is visibility, clarity, control. Understanding what's going on in your business so you can make the right decisions confidently. AI bookkeeping helps you get that clarity faster. Human oversight keeps that clarity accurate. You need both. If you're tired of the chaos, tired of the uncertainty, tired of looking at the bank account and hoping for the best, AI bookkeeping will help. But you need to combine it with human who understands what the numbers really mean, not just how to push them into categories. So here's the big takeaway. AI bookkeeping is not something you should fear or trust blindly. It's a tool. It's a powerful tool. When used properly, it will save you time, reduce your stress, and give cleaner data than you've ever had before. But if you trust it without oversight, you're gambling with your financial health. The hybrid model is the answer. Let AI do the grunt work. Let a human catch the mistakes, and let the combination of the two finally give you clean books that you can actually use to run a stronger business. All right, that's it for this one. If you want more videos like this that actually help you understand your business without the noise, make sure you subscribe. I'll see you on the next one.